Rivian, the company who said, you know, all I'm seeing is sedans. Let's spice up the EV market, let's make a truck. And so far, it's worked out. I'll cover the basics of their business, like what cars they sell now, their product lines coming up, their financials, and I'll also do a SWOT analysis. Most of this is from the annual report, a 219-page document that you probably don't want to read. This isn't financial advice though, and if I have to sum up what they do in a single sentence, they are a new electric vehicle company who has released some big, expensive cars, but who are about to release some more moderately priced EVs, set to be out in 2026. Rivian's cars currently out use the same drivetrain. That's the motors, suspension, the batteries. Then if you have a truck bed on top or some extra seating, that's just icing on the cake. They have two consumer models out, the R1T and R1S. The truck can carry up to 11,000 pounds and has between 270 and 420 miles of range. It's been a few years since they've released it, and they even have a second generation out and a quad motor version coming out later this year. The R1S is a full-size SUV with 7 seats and is the #1 best-selling SUV in California, over $70,000. Now that is niche, but it's something, it's popular. They are expensive cars. Since they were a first-time car maker, they got their supplies at a premium, and it's not a good thing. On the commercial side, they have these white vans, which are perfect for kidnapping. They have between 500 and 700 cubic feet of space, so you can grab a lot of people in one trip. They're also quiet, so you can sneak away into the night undetected. They do start at $80,000, so kidnappers do need to have a lot of money, but I'd argue that if they use this van, they deserve at least a couple years off because they're being eco-friendly. It's for commercial customers and it's supposed to be used in fleets. For example, Amazon, who's a big customer and shareholder. They developed a special variant for Amazon called EDVs, or electric delivery vehicles, and have around 20,000 of them on the road as of the end of 2024. R2 is underpinned by the mid-size platform, which is a new drivetrain. R2 is a mid-size SUV with 5 seats and 300 miles of range, but for way cheaper, $45,000. That's how much they're selling it for. They've already sourced pretty much all the materials, and that puts it right around the price tag of the Model Y. Production is expected to start in the first half of 2026, and they'll also launch R3, which is a crossover, and R3X, which is a performance variant. Supposedly, the R3 will be even cheaper than the R2, but they're gonna launch it after, since they say that they've learned from launching the R1T and R1S way too close together. The next segment is software and services, which is significantly smaller and is made up of remarketing, which is them accepting trade-ins and selling used Rivians, repair and maintenance, because these are cars and they will break down, so someone has to do the maintenance and organize all that stuff. The Rivian Adventure Network fast chargers, which while important, is not as important as they were before, since most EV companies have opened up at least a portion of their network to other users, or compatible vehicles rather, while others are just open for everybody to use. For example, Tesla, who's opened up some, and ChargePoint, who has their network open for everyone. The last piece is software and subscriptions, which offer all of these features here, and Fleet OS, which helps you with things like telling you when to bring in these vans for maintenance, among other things. Subscriptions have been here for a while. They're on cars now, and they're probably not gonna go. Unfortunately, as a consumer, that sucks. But for the business, that's pretty good. But ultimately, the core moneymaker for Rivian is selling the actual car, which they started doing only a couple years ago and have very quickly gotten to almost 5 billion in sales. If we switch to gross profit, which is just revenue minus the physical cost of the car, not any departments like accounting, marketing, or research and development, it isn't great. Their costs are very high, but they are making some incremental improvements that do add up. If we factor everything in, it's still not great. Look, they're still making improvements, and R2 is going to come out very soon, and hopefully that will help Rivian out. Shifting to their balance sheet, they don't have much debt and they do have some cash, but they do need access to more capital, which they get from 2 sources. First up is the joint venture with Volkswagen, where they will invest up to $5.8 billion in a multi-year deal. Rivian gets cash, VW gets debt, stock, and access to some tech.
Just want to confirm, the VW group, the partnership, it is on electrical architecture, not inclusive of the autonomous stack.
Yeah.
Is there any hardware, any bodies in white going to be going back and forth?
No, that's not to say something like that couldn't happen, but what we've talked about in terms of the relationship and the partnership is purely around the software, leveraging our software stack and leveraging our topology of ECUs and associated network architecture.
Think of ECUs like the brain of the car. They control things like AC, self-driving, the entertainment system. By using some of Rivian's great tech, they will get a lot more competitive, because legacy car makers aren't that great at the software stuff. I mean, have you seen these displays? Software was an afterthought. It didn't even cross their mind. And since that isn't where their strengths lie, they decided to outsource that. The money will be slow drip to Rivian as they hit certain metrics, like for example, positive gross margins. They also have access to a DOE loan, which will be split in two and be used to build a factory in Social Circle, Georgia. Yes, that is a real place. It'll have capacity for 200,000 cars annually and the second tranche for 200,000 additional cars if all goes well, of course. They expect to start construction in 2026 and be producing cars in 2028. Comparing how they're doing last quarter compared to the same time last year, revenues are up a slight amount, although they did warn us in advance it wouldn't be anything exceptional. But gross profit is positive. Their first positive gross profit quarter was Q4 2024 though. That was one of the VW milestones, and they'll get around $1 billion for that. Net income is doing much better, but it still does have some room to grow to be, first of all, not negative, and secondly, big, positive, the good stuff. At their plant in Normal, Illinois, yes, that is an actual town again, they can make up to 85,000 R1s and 65,000 RCVs or Rivian commercial vehicles if they're operating at maximum capacity. This year, they are preparing for R2 and will be increasing capacity at their Normal plant by an additional 155,000 vehicles. They'll have to shut down the plant for 1 month just to get ready for this. And just to be clear, while the current capacity right now is 150,000, they're making nowhere near this amount. Part of the decrease in 2024 was due to a part not being available. And if you don't have even a single part in a multi-thousand piece truck, you just can't make it. They are hoping the R2 really picks up sales. And for reference, here are the sales figures for other car brands. Tesla alone outsold Rivian by 35x last year. So they have a lot of room to grow. And if we're gonna switch to look at stock prices now, first of all, realize that all three companies are in very different positions. Rivian is brand spanking new and took a pretty big fall after its IPO. I mean, it was almost at 130, now it's at 14. Tesla is going through some brand damage, possible political retribution. Tesla still ends up on top, but Volkswagen is negative, and the reason for that is because Volkswagen does pay a dividend, so it's not wholly representative of their performance. Rivian has two types of shares. There's Class A, 1 share, 1 vote. Then there's Class B, 1 share, 10 votes. Rivian Class B shares will convert to Class A shares once one of the following conditions have been met. I'm not going to list all of them, but one of them is 5 years after their IPO date. So in November 2026, all B shares will be converted to Class A. Their biggest shareholder is Amazon. They're bigger than both Vanguard and BlackRock combined. The friendship started in 2019 and they asked for some vans. And they did get some custom ones. They started to get put on the road in 2022 and they want 100,000 vans by 2030. Subject to changes, of course. Rivian CEO is named RJ Scringe. I'm sorry if I butchered your name. He started the company in 2009 and initially worked on an EV supercar so he could get some money and work on a more mass market product. Sound familiar? But since the EV supercar idea was what everyone was doing at the time, he decided to switch lanes and start working on a truck. And that strategy's worked out pretty well for him, I have to say. Now it's time for a SWOT analysis, starting off with strengths. They've made it through the hardest part: surviving, designing, and making a car that actually just works. They also have deep relationships with Amazon and Volkswagen, and if things don't go well for them, they could ask for help. Although things are going okay for them. Making an EV that costs $45,000, that's a pretty good price tag and may push them into profitability. A Consumer Reports survey also ranked Rivian #1 with 86% of people saying that they would buy Rivian again. While Rivian does have its own EV charging network, the overall charging stations do need to grow. There need to be a lot more. That's a problem. Another weakness is that they still require some capital. If R2 does poorly, they could see themselves being in some real big financial troubles very quickly. Gross profit is positive, but we're still ways away from having net income be positive. Opportunities wise, they could take up a bigger share of the EV market, which in and of itself is also growing. Tesla has also damaged their reputation by attacking customers on the left, where that's where most of their customer base is. So people might just get any other EV but a Tesla, and Rivian's right there. EVs are also fresh tech, so you might get those massive game-changing innovations that you maybe won't get with an internal combustion engine. Because how long have we had ICE engines for? What, over a century? EVs though, they're a little more fresh. They do also have an autonomous driving service, which while still limited, is getting better. They do have an event in the fall that'll get into all of the details, but here's what RJ had to say about safety and insurance now.
And RJ, as you build the autonomy platform and launch more features, clearly the technology can also accrue to vehicle safety. Can you talk about, in a couple of years, how safe are Rivian's vehicles? Are there opportunities for you with an insurance, reduced cost of ownership? What could that be for the company?
I mean, to be clear, if you use Rivian's, what we call highway feature today, where you can get on the road, it drives itself on the highway, it's remarkably safer than a human, than the best human. And so we have an insurance offering, and one of the reasons we built the insurance side of our business was contemplating exactly this. And your rate actually goes down the more you use our Driver Plus feature. So if, let's say, you use it all the time when you're on the highway, you will have a notably lower rate because the risk profile is dramatically reduced.
Threats-wise, the current administration in the US isn't very fond of going green. They're taking away the EV tax credits after 2026, and since Rivian is mainly based in the US, this will hurt them. They could also potentially touch the Department of Energy loan, or maybe the deal's already been signed and everything's been inked, but who knows? This administration is quite chaotic. There could be some changes to access to some critical earth minerals. Nobody knows what's going to happen with trade relationships, China. No one knows. Chinese EVs are also very good and incredibly cheap. They are outselling Tesla. Now, they might tariff it into oblivion in the US, but eventually Rivian's probably gonna have to go outside the US and they're gonna have to compete. Rivian's the electric vroom vroom machine that can bring us outside and in nature where we should go more often. Just make sure you don't open your window, watch YouTube on that giant display for 3 hours, and consider that getting fresh air. So remember, just go outside, maybe get off your phone, like, sub, and goodbye, people.